The global economy has witnessed numerous trade conflicts throughout history, but none have drawn as much attention as the trade war between the United States and China. While both nations wield immense economic power, many analysts argue that China is unlikely to emerge as the loser in this prolonged conflict. To understand why China has a stronger position, we must first examine the underlying structure of its economy. Over the past few decades, China has strategically transitioned from being a low-cost manufacturing hub to a technology and innovation powerhouse. This transformation has given China leverage in crucial industries such as electronics, semiconductors, and green energy. For instance, China's dominance in rare earth minerals provides it with significant control over the production of essential components used in everything from smartphones to electric vehicles. Since rare earth elements are vital to global technology supply chains, any disruption in China's export of these materials could severely impact Western industries. Additionally, China's robust domestic market acts as a buffer against external economic pressure. With a population exceeding 1.4 billion, China has developed a powerful consumer base that fuels its internal economic growth. This means China can rely more on domestic demand when global trade tensions rise. In fact, Chinese consumers have become a major driver of global markets. Companies around the world increasingly rely on Chinese spending power, particularly in sectors such as luxury goods, automobiles, and e-commerce. This reliance gives China substantial bargaining power in trade negotiations. Another crucial factor is China's strategic investments in global infrastructure through the Belt and Road Initiative. By financing major projects across Asia, Africa, and Europe, China has strengthened economic ties with dozens of nations. These partnerships ensure that China's exports remain in high demand, even during strained trade relations with Western countries. Moreover, China's state-controlled economic model allows it to absorb economic shocks more effectively than market-driven economies. In a trade war, government intervention enables Beijing to support key industries, stabilize employment, and manage currency fluctuations with greater precision. While tariffs imposed by the United States initially put pressure on Chinese exports, Beijing responded by diversifying its trade partners and investing heavily in technological self-reliance. This strategic pivot has reduced China's vulnerability to external economic coercion. For example, China's aggressive push to develop domestic semiconductor production has begun to reduce its dependence on American technology firms. This long-term strategy demonstrates China's commitment to achieving economic independence in vital sectors. Furthermore, China's ability to leverage its manufacturing dominance allows it to impose retaliatory tariffs that significantly impact Western businesses. By targeting industries that are politically sensitive in the United States, such as agriculture, China has demonstrated its ability to counter trade pressures effectively. It's also important to highlight China's growing influence in global trade alliances. While the United States has adopted more protectionist policies, China has expanded its role in multilateral trade agreements, such as the Regional Comprehensive Economic Partnership, RCEP. This strategic move has positioned China as a key trading hub in the Asia-Pacific region. In contrast, US businesses have faced rising costs as a result of the trade war. Many American companies that relied on Chinese supply chains have struggled to find alternative sources for raw materials and manufactured goods. As a result, tariffs have often translated into higher prices for American consumers. From a geopolitical standpoint, China's long-term economic strategy appears far more sustainable. By prioritizing investment in emerging markets, strengthening domestic innovation, and reducing dependence on Western technology, China has positioned itself to thrive even in a fragmented global trade environment. In conclusion, while no nation escapes a trade war unscathed, China's economic resilience, strategic foresight, and global influence make it unlikely to be the ultimate loser. The country's ability to adapt, innovate, and build strong international partnerships has fortified its position as a dominant force in global trade.